Identifying patterns it really has to do with nothing more than how do I say this? It's about historical perspective when it comes down to it. David, do you know how to identify an impulse leg? I mean, obviously, we can look at a chart at any given point in time, and we can identify impulse legs, right? There's one there. You know, I can look at these little legs here, and I could tell, yes, these are impulse legs here. There's a big long one down here. But can we do that? That's really phase one of identifying patterns, is you've got to be able to identify the impulse leg. And once you've identified the impulse leg, it really is a lot about ratios. And and also about the amount of time that you're putting into the back testing. So the second question I would ask, David, is how much time are you spending actually going back into the charts and looking for patterns? Vaguely. Okay. One of the things that I teach traders to do, and that is essential to the process, and some people do it and some people don't, and I can tie directly to, I can tell whether or not a person is doing this based on how successfully they're able to identify stuff and how much they complain to be about not being able to see things. Is you scroll a chart back, and I don't care where you go, okay? We'll just go back here into the middle of nowhere. Okay, right here. And what I'm going to do is I'm just going to start drawing. So I'm going to make this chart, and I'm just going to start drawing. And I don't care. We've got, you can draw the leg like this, or you can draw it like this. I don't care. It doesn't matter. Okay? All that matters is you're training your eye to see movement on a chart. So let's say that we decided we're going to do like this, right? And then we see the market rally. We're just going to do big swings here, right? And the market really rallies to here because that's the high point of that move. And then we see, and then we see a move back down into here, and then the market rallies, and then we get a double bottom. Looking down here, bullish divergence, something for later. Then we continue on, and the market rallies up. We get a pullback. We get a rally, and a double top. Then we get a break of structure to the downside. Then we get a rally up. Then we get a retracement. Then we're going to get a rally up. Then we get a press down. Then we get a retracement. Then we get a massive spike down that clears out a whole bunch of mess. And then we get a huge rally. Now, once this is done, this is phase one. And I tell traders in the first phase of training, you should be doing this with your charts. Draw it in. And then if you want to go the extra step, you grab your little box tool here and you say, this is a new structure high. This is where's my tool here? Higher low, lower high, retest. Okay? This is what happened here. The way I have identified it. Market made a new structure high. Why? Look left. Structure leaves clues. Let's draw. Structure leaves clues. We broke structure to the upside. Market came back down. We put in a higher low. Why is it a higher low? Because this high is higher than this high. Then we got a lower high. Why is this a lower high? Because this high is higher than this high. Then we got a retest of the low. Why? Because we didn't get a break below, close below of structure at this level. Then we get a rally out of that. Then we get a double top, and you put all of this stuff in here. Now we go back to the next phase. Okay, so once we've done this, we've labeled all of this stuff in here. Now we go back and we find out, why did that occur? So we look and we say new structure high, followed by a higher low. Why did the market stop there? horizontal line. Let's just use this. Why did the market stop at that level? Look left, structure leaves clues. Then the market rallies out. We come down. We put in this double top. Why did the market choose to double top right there? Look left, structure leaves clues. Then we get a break below, close below. This is almost a false breakout. Where did we come down to? Look left, structure leaves clues. There's that inside support and resistance level on the double top, or the double bottom. Then we rally out, new structure high. Then we pull back. Where do we pull back to? Look left, structure leaves clues. Then the market rallies up. We get a pullback. Where do we pull back to? Look left, structure leaves clues. There's that previous resistance level that the market had been trading in between, and then the market rolls over. Now, are there trading opportunities at every single one of these levels? No. But what does it teach us? It teaches us that the market has order. That is, it is not a chaotic minefield. That movement and back and forth in the market is not arbitrary. It's specific. That there is a process happening here. And not only are you learning that the market has a rhythm, that the market has a language, and you're learning to read that language, but also you're training your eye to recognize these moves instinctively. And now what we can do is we can start combining. So we have our new structure high followed by our pullback, and we grab our Fibonacci retracement tool. And in the beginning, you're going to have to do this with your retracement tools. You're not going to be able to do it with your eye. And you're going to see that 382 retracement followed by a new structure high. Once we get the breakout, what are we looking for? 382 retracement tends to indicate a trend continuation trade. Double bottom into the 382. Buying opportunity. Where are we potentially looking for our targets? Let's look for the 127 extension of the initial leg of the move. Back down in. Where's that 127 come in at? Boom. Like a glove. And at that 127 extension, what happens? The market dies. Where do we come down into after that 127 extension? Let's grab our Fibonacci retracement. And we're going to go swing low to swing high. Coming right down into 786, 886 ratio completion. What do we have, ladies and gentlemen? X to A to B. B to C, C to D. A random point in time, learning to read structure, support, and resistance. How many trading opportunities do we have right here in this tiny span of time? We've got short-term trades, longer-term trades. We've got structure trades, trend continuation trades, counter trend trades, all right there because we understand the power of structure. We understand that the market has a rhythm, that the market has a language, and we've learned to read it. But David, it starts with new structure high, outside return, high or low. Does it make sense? Are you starting to see the power of what we do here every single day and the amount of opportunity that it opens up to you? Any market, any time frame. I don't care what you're trading because charts are charts are charts because we're emotional creatures and we all make the same decisions over and over and over again. It's predictable. The market is not a vast, chaotic minefield. It's full of structure. It's full of order. All you need to do is look. Any questions? Corey says, what do you do when you take a pattern trade and when the first 382 target is reached, it forms the D leg of a new pattern? Do you stop and reverse? Corey, that's a question really designed more for trade plan. If you're already in a trade, then my advice to you is absolutely not. You're in a winning trade. You stick with that trade, and you wait for that trade to play itself out. What you're talking about is really a pattern inside of a pattern. And you see a lot of this stuff where you'll see on multiple time frames where you'll have, a long entry on one time frame, but if you go down a time frame, you'll have as that market starts to rally, it'll be the short entry of another pattern. And that's why we have trading time frames and higher time frames. Higher time frames give us an overview of what the market is doing, and then our trading time frame is where we actually make our trading decisions off of. So for pattern recognition, you can use higher time frames or you cannot. It really doesn't. I haven't done any testing, and I have no verifiable evidence that shows that if the underlying trend is bullish, that taking bearish patterns negatively affects the portfolio. We see temporary reversals in bullish patterns in bullish markets that produce profit all the time. So I don't have any proof one way or the other. But one of the things about the Constellation software is it will let you turn on or turn off just bullish patterns. So you could literally run through, let me pull up the pattern stuff here. So let's take a look at this New Zealand yen. We're on the 60-minute chart, right? Let's go on out to a daily chart. And let's take a look at what the actual daily chart looks like, and we'll determine whether it's bullish or bearish, right? And we'll do that using the same structure techniques that we used to determine whether we're in a new structure high or not. So what we've got is market's been running up. I'm going to do this very quickly, okay? Running up, boom, we pull back, and now we're rallying. Is the market bullish or bearish? Anyone? Bullish, right? Yeah. So we're in a bullish move right now. So what I can do is, since I know that this market is bullish, and it's going to be bullish until we violate the lows here at 85, 86s, that's a significant amount of time, right? What I can do is I can drop down to my hourly time frame, my trading time frame. It'll be just a minute for our little chart to load up here. We drop down to our trading time frame, and then what I can do is I can go into my indicator list. Whoop, I got to wait for it to change. I can go into my indicator list, and I can turn off all bearish patterns. So I can say, you know what, the market is bullish right now. I don't want to be taking short positions. So I'm going to grab my indicator list. I'm going to go into my software package here, and I'm going to shut off all of the, all the bearish patterns. So all the bearish patterns I'm going to make false. Now watch what happens here when I execute. You've got a bullish and a bearish pattern here on New Zealand. Click apply. Well, what just happened? Oh, because I turned off the wrong thing. Here we go. Let's turn off all of the bearish patterns. Boom. And I click apply. And there goes the bearish pattern. Now I'm only looking at patterns that agree with the underlying trend, right? I'm going to turn that back on here. Make it true, apply, okay. But if you have if your trading plan is set up that way, and you're saying to yourself, well, I don't want to take any bearish patterns in a bullish market, in a strong bullish market. Well, that's simple. And a great way to look at this would be what we saw in pound dollar. Okay, so pound dollar on the daily. Good grief. Hang on. Oh, we get all the way. There we go. Pound dollar on the daily chart. Just very strong bullish market. We tried to take a bearish pattern here. You guys remember? There was a bearish pattern set up here. Actually, no, it wasn't that. It was this one. We took this bearish pattern. Right here. And we ended up getting skunked out. Market ended up stopping us out. And I think if we even drag this back, we've got another pattern here. Anyway, market ended up blowing through that and ended up stopping us out on that pattern, right? Well, this is a bearish pattern in a very strong bullish market. One of the ways you can kind of filter trades is by simply turning on or off bullish or bearish patterns. That way, when you set up, think about the number of markets that you can follow, right? When the pattern is drawn for you, when you don't have to go through the type of analysis that I just did for you on that New Zealand, whatever it was, the Aussie yen chart that we looked at, and you can just trade the patterns that show up. And then you can so finely tune on really a weekly basis what you're looking at that you're only looking at patterns that go in the direction of the underlying trend. We tested 10 different pairs on 2 different time frames for bats and ciphers with this software and what the software generated. And what we found was is that if you traded 10 different pairs, you did phenomenally well. I think the only pair that did not make money, and it was a very narrow loser, was New Zealand dollar on the hourly chart. That was it. It was the only one that didn't produce out of the 10 that we tested. On the 15-minute chart, it did real well. But on the 60-minute chart, for some reason, over the last 5 years, it did not perform. It was basically a break even to a little bit down. But what that says is, imagine if you could diversify across 10 different pairs, and all you did was trade those 10 pairs, and all you did was trade 1 or 2 patterns on those 10 pairs. And you could so finely tune it in that you could walk in every day and you could see on the 60-minute time frame or on the 15-minute time frame, all 10 patterns, they were already appearing for you, already showing up. And all you had to do was now manage that portfolio. You see what a time saver that is? How that eliminates, a massive amount of the work. It really is that's why I'm so excited about this stuff, right? Because I got a group of traders who want to learn the skill of trading. But they're also here to make money. Let's not kid ourselves. We're here to make money. And if I can help you make money faster, more effectively, and we can spend more time working on what is really the 95% of the work, which is the psychology piece, and we can be working on some of the training and understanding the patterns and learning the process behind that, and you can be running through this pattern recognition stuff on your own and learning the skill, while at the same time every day coming in, looking at your 4-market, 6-market, 10-market portfolio, and just executing trades and following the rules and working on managing that portfolio rather than hunting for trades. Do you see what a massive advantage you now have? Tell me that you're excited about this, because I am freaking beside myself at how cool this is. But again, going back to what we were talking about before, David, in identifying them, becoming a true professional, it's new structure high, new structure low.